Hey Bowtie Nation, Joseph Hogue here with another news-related video and a very important update because investors are freaking the hell out.
I am totally freaking out!
Oracle is now down 10% just this week, and Nvidia holding on a little better, but still flat over the past 2 months. So I wanted to show you why AI stocks are falling, why you cannot get caught up in this selling, and then 5 stocks that I'm buying that will make you money. And this all started with, as if the AI stocks theme wasn't already hot, the market went into ludicrous speed when Oracle announced almost $500 billion in backlog orders for its cloud services. Now, I highlighted Monday that this meant the company would be spending upwards of $114 billion in building out its data centers and everything that goes into that AI infrastructure theme over the next 4 years. That sent shares of Oracle up 36% and recharged the entire AI stocks theme and was followed by even more news. On Tuesday, we heard that Nvidia was investing $100 billion in OpenAI to fund its growth. That same day, the journal outlined OpenAI's plans for up to $1 trillion in AI data center spending, and really some mind-blowing numbers here. OpenAI is constructing a massive site in Texas and laid out plans for 20 gigawatts of computing capacity to power its 700 million users of ChatGPT. And for reference here, every 7 gigawatts is enough to power 8 million homes for a year. Every gigawatt of computing capacity at a data center costs roughly $50 billion in spending, and analysts estimates that AI could need as much as 100 gigawatts or $5 trillion in investment over the next several years. But then investors did start asking the smart questions here. Are we getting ahead of ourselves? And more importantly, where is all that money coming from? And it is important because it is increasingly all coming down to Nvidia funding that AI theme and the difference between real sales and vendor financing that is basically really just a loan to its customers. Nvidia is investing that $100 billion into OpenAI, but for every 10 gigawatts of AI capacity, the company needs around 4 to 5 million of Nvidia's GPU chips. Putting this in dollar terms, estimates are that for every $10 billion Nvidia invests in OpenAI, the startup will spend $35 billion on Nvidia chips and software. So then cue the memes, and I love these pics recently, and it does feel a little like a surge protector plugged into itself, feeding all those other AI companies, but living off its own juice. But here's the rub, folks. I'm going to show you why even if this is an AI bubble, even if stocks are eventually set to crash lower, it makes no sense sitting around for that apocalypse to get those better prices, why you need to keep investing, and why these stocks are set to go much higher, including the 5 that I'm buying right now. But first, I'm excited to announce your chance to get a share of the monthly revenue generated from this channel. Starting yesterday through the Gigastar platform, I'm offering 15% of the channel revenue to investors. This is the third and last investment round we're going to do before that secondary market opens up later this year. Almost 700 investors joined us over the last 2 rounds to get a piece of the channel revenue and have collected over $48,000 in distributions over the last 2 years. Last year alone, we raised $123,000. Those investors have made over $20,500 in distributions, almost a 17% cash return. In fact, the channel revenue has grown to over $120,000 over the last year, nearly double the revenue over the year before, and I've got some great ideas how we can work together to take it even higher. More than that though, as an investor, you're going to get special access to perks, access to the private Discord channel, investor-only live streams, and all new video courses absolutely free. And the investment round is only open for 3 weeks, but don't wait because Diamond Tier shares that come with those free courses have sold out within hours in the last rounds. Now I'm going to link to the Gigastar platform in the description. Click through and you'll be able to see all the details, ask questions, as well as see the official documents I filed with the Securities and Exchange Commission, the SEC, for this investment offer. Back to those AI stocks though, and against that giant potential from trillions of dollars in spending, stocks are undeniably expensive. Here in the FactSet earnings report, we see the S&P 500 trailing 12-month PE ratio, so the price of all the stocks in that S&P 500 index, the main market index, divided by the earnings that they've reported over the last year. So this is your main measure of valuation. How expensive are stocks? And you can see here at over 28 times on that PE ratio, that price to earnings, investors are paying $28 for every dollar in earnings reported by the companies that they own. That is way above the 10-year average there in that dashed blue line, just above 22, so about 30%. Stocks are trading at a 30% premium over that average over the last 10 years. And on this, Fed Chair Powell spooked investors Tuesday, saying that stock prices are, quote, fairly highly valued. Now, the old timers like myself remember back to a now infamous speech by Fed Chair Greenspan in 1996, saying almost the same thing, if not a lot more poetic, calling out the irrational exuberance in the market for internet stocks. When Greenspan did that, stocks were already up 214% in the 7 years to December 1996, and we were seeing that same flood of investment into internet companies and the infrastructure for it. In fact, it's ironic that Oracle is back again in all of this, up 843% in that dot-com boom to Greenspan's 1996 exuberance. But then back then we had the smart guys sitting back on Greenspan's warning and saying, you know what? I'm going to sit this one out, wait for all the suckers to crash the market, and then pick up the pieces at cheaper prices. The problem is, they were in for a very painful wait and missed out on a 1,640% return, almost 17 times their money over the next 4 years. Oracle alone was up 609%, or 7 times their money over that period. In fact, in some sad twist of irony, even if you were able to time the market exactly right, perfectly, get back in at that crash low of September 2002, you would have only bought back in at almost exactly the same point where the NASDAQ was at 1996. So it would have been 6 years of waiting for absolutely nothing. And of course, you sure as hell better have hoped that you got back in on Oracle, which is now up 6,000%, more than 60 times your money since then, turning just $16,000 into millionaire status. So the truth is, nation, stocks are expensive, and this AI spending boom is eerily like the dot-com craze that I saw when I first started investing in 1999. Yes, but you cannot time stocks based on a gut feeling or what some Yahoo with a Princeton degree says. But those warnings by the Fed chair have caused a sell-off in some of these stocks. We are seeing a dip into the headline stocks like Nvidia, like Oracle here, ORCL on these fears, not just on pricey stocks, but the idea that this is all based on Nvidia funding that growth. Here's the deal though, and we're here in the Nvidia's cash flow statement showing the actual cash in and out of the company. That money isn't coming out of thin air, and it is growing. We know just the 4 hyperscalers, Amazon, Google, Meta, and Microsoft, are spending upwards of $1 trillion in AI data center buildouts, and Nvidia alone booked $72 billion in free cash flow over the last year. That's free cash flow, which means after investing back into its own business, free cash flow that it needs to put somewhere. Now, this AI capacity and the data centers take years to build, so a lot of this money is locked in, contracted, and is going to be spent. Eventually, if that profitability does come down enough, or if the end users don't grow and need that AI resources as they're expected, then yes, we could see the whole system crumble and that data center spending slowing, which is going to mean lower revenue growth for Nvidia and pretty much everyone else, but it is not going to happen this year or next. So what I think is going to happen, and we're here in the Nvidia analysis tab on Yahoo Finance, what shows the earnings and revenue forecast by investors. We can see that Nvidia is set to report earnings November 19th, so a little bit late in the earnings season there. What I think happens is we could continue to see some weakness, those short-term investors getting scared and selling out over the next couple of weeks. But then when those second quarter earnings start coming out in October, so just a couple of weeks here, and more importantly, the management updating their outlook for the full year and the next year revenue growth is going to bring investors right back on a big bounce. Now again, Nvidia reports late in the season, November 19th, but we're going to see a lot of these other stocks before that. Nvidia is expected to report 55% of sales growth in the quarter, and these multi-billion-dollar deals that we've been bombarded with over the last couple of weeks, those could have it updating its forecast to even higher sales growth to come, even higher than the 32% expected next year. And besides just the main AI stocks that we're talking about here, earnings overall still look very good. Here we are in the FactSet Earnings Insight, looking at the S&P 500 index, so those 500 largest companies in the United States, revealing the analyst estimates for those. And analysts expect full-year S&P 500 earnings growth, so all the earnings for all those companies, almost 11% this year, and for that to increase to 13.7% for next year. Very strong earnings growth that is going to support this market. And so I could go all numbers nerd on you and say that even if this is a bubble, it's not like the dot-com bubble where investors were chasing those hugely unprofitable stocks. I want to get to these stocks to buy, and I don't want to make this a super long video, but again, even as that irrational exuberance grips us all, you cannot wait to invest in stocks. And digging into this theme, it is the companies that make the things that go into these AI data centers that you want to be watching and buying. The picks and shovels play on that AI revolution, and nobody puts as much into a data center as Broadcom, ticker AVGO. And the company has positioned itself at the center of the AI infrastructure buildout. At its core, Broadcom provides the foundational networking components, the Ethernet switches, connectivity, and optics that form the backbone of those AI clusters, as well as its own AI accelerator chips. We can see here in the analyst forecast, Broadcom is expected to post 24% revenue growth to $17.5 billion for that second quarter, expected to update to 22% growth for the coming quarter, 22% for the full year revenue growth there, and 32% for next year. I think, again, with all of these deals, with all these AI data center deals coming out, I think it at least confirms that or even updates that speed, that growth of 32% even higher, which is going to support the shares here. And all you out there in the nation know, Arista Networks, ticker ANET, is one of my favorites in this AI networking theme, which is one of the biggest bottlenecks in the data center build out. Okay. Within a data center, they need to get that information from storage into the processors, into the servers, and into the chips. And there is just not enough pipeline capacity, if you will, to really do that. The pipeline of networking hardware and software needs updated. Now, Broadcom might be some tough competition here, but Arista's 25% revenue growth this year proves it's getting a big piece of that pie as well. In fact, Oracle has publicly reported that its AI infrastructure is based on Arista's EOS-based switches for that back-end training, and it's endorsed Arista's clustered load balancing to improve throughput on its own networks. It is Arista's microsecond-class latency and that load balancing that companies like Oracle and OpenAI will need in their data centers, and that's going to keep the money going for ANET. Here we see in the second quarter, so this current quarter, the ANET is expected to post 25% revenue growth, 20% for the next quarter there to December. That's $2.33 billion, 25% growth for this year, and 20% for next year. Here, especially with that news for Oracle, with the tremendous almost $500 billion in backlog of Oracle orders and the $114 billion it's going to be spending over the next 4 years. Its partnership with Arista Networks here in that networking device and the hardware, I think ANET is almost certainly going to upgrade these estimates, upgrade next year's growth beyond this 20%. I think that's going to be a big driver for the stock when it reports earnings here coming up. And here, investors in Supermicrocomputer, ticker SMCI, freaked out when the stock dropped to $40 recently, but I used it as an opportunity to buy more. And the company was up 11% last week on news that it had started shipping servers with Nvidia's new Blackwell chips, and no other company works as closely with Nvidia than SMCI on getting those chips into the servers for data centers. SMCI makes the most efficient servers in the world with its liquid cool technology, and it's estimated to control as much as 22% of the AI server market. So really the winner when it comes down to that building out those data centers. Here we see analysts were expecting just 9% sales growth for the current quarter, that second quarter, 9% to $6.5 billion. Now, we do know it was about 8% sales growth expectations for the first quarter. When those quarterly earnings came out there a few months ago, that stock took off because they reported much higher sales growth. I think that's what we're going to see again when SMCI reports its current quarter numbers here in a couple of weeks. The next quarter is expected to jump to 33%. We're going to see 45% annual sales growth to $31.88 billion and another 24% next year. But with this AI data center spend out, I think that even beats that $40 billion expectations for next year. And going here to the valuation measures for SMCI, you see why this is my biggest investment by far in my portfolio. Over $1 million in shares here in this one stock, because you look at these price to sales measures for the stock trading at just 1.3 times. Okay, so the price or the market cap of the company divided by the trailing sales that it's reported, just 1.3 times on that measure. Okay, it's traded as high as 4 times. It's traded as high as 6 times last year, but just 4 times last June. It's traded as high as 1.4 times here this June and as low as about one times. So if we just do a back of the envelope test here, $27.5 billion current market cap of this company divided by 40, that is just 0.68 times on a price to sales basis. If investors continue to pay just 1.3 times price to sales, we would go Price to sales of 1.3 times that $40 billion in sales expected next year, which I think they can easily do, maybe even do better than that on this AI data center spend out. But that $40 billion in expected sales next year times 1.3 times price to sales valuation, that is a $52 billion market cap, almost double where it is now. 27 divided by $27 billion current market cap, that's a 92% return. 92% return on these shares. $45 current price, that would be an $86 share price for SMCI. I think it goes at least to that point over this next year. And here, Astera Labs, ticker ALAB, is smaller than the other two networking stocks, the Broadcom and Arista, but this is booking monster growth on an industry-leading connectivity portfolio and its switch design. The company also expanded its collaboration with Nvidia for the NVLink Fusion ecosystem earlier this year, showing that these networking companies aren't necessarily competing, but they're all growing together. Astera expected to report its earnings on November 3rd, so again, a little bit later in the earnings season, but look at this growth here. It's expected to post 82% sales growth for the current quarter, for that second quarter, 53% next quarter, 95%, almost doubling its sales from the year ago period to $776 million for the current year for all of 2025, and 31% sales growth to $1 billion next year. Again, like a lot of these, with that massive spend out for the AI infrastructure for those data centers, I think Astera gets a good chunk of that, and I think we see a lot more than $1 billion in sales over the next year for this company. And I couldn't forget the dark horse here, Advanced Micro Devices, ticker AMD. Even though Nvidia dominates in those AI chips, we're going to see a lot of that data center money going here to AMD, which is up more than 40% since I started buying and recommending in February. And that's because AMD makes the chips that are going to be going into AI's next phase, that inference stage of the models. So from training those models into inference stage and actually using those AI models, and that is going to drive growth for this company. Just with Oracle and it's spending hundreds of billions of dollars to build out its own centers, it keeps expanding on its general purpose compute with AMD's EPYC line within its cloud infrastructure program. Oracle's own blog marked the announcement, calling AMD's CPUs a new standard of performance with 33% more compute and memory, and then 2 times the networking bandwidth. And here in the analyst forecast, we don't see the same kind of growth we saw with Nvidia, but still very impressive growth, 28% sales growth expected for the current quarter. That second quarter earnings is going to be reported out on November 4th. To $8.7 billion, 19% expected for the next quarter when it reports there, a 28% sales growth expected over the year for the full year, and then another 22% sales growth to $40 billion for 2026. Again, like a lot of these companies, I think when we see those earnings come out, when we see it update its full year and next year guidance, I think you see a surprise to how much these companies are increasing their sales growth estimates just on those new projects being announced by Oracle, by OpenAI, by Nvidia, really supporting the spending growth in this theme. Nation, the AI theme is not slowing down, and you cannot get scared out during these little corrections. Okay, this could be your best chance to buy back in at some of these lower prices into the next year. Click through below and get your share of the revenue from this channel. Look for the link to Gigastar Markets and invest in the Let's Talk Money channel to get monthly payouts and join over 700 investors in the channel. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.